Hey everybody, welcome back. So today I'm going to be talking about Tesla stock. Everybody in the market is just making a ton of money on Tesla. Unless you are bearish and have been shorting Tesla, then I'm sorry about that. But anyways, if you have been following Tesla for a while, you would know that Tesla has just been going insane, right? Like all the bears have been disappointed because Tesla has just kept going up and up and up. Just in the year to date, it's up 52%, almost 53%. In the last month alone, is up 10%. In the last 6 months, has been up just really 80%. So it's been up and down the year, but overall, it's been a crazy ride for a lot of people who have been holding Tesla. Okay, now we have been hearing news almost every week. I feel like that Elon Musk is doing something kind of crazy. For example, a day ago, he has now unloaded about $10 billion of Tesla stock, supposedly for tax purposes. But who knows what's going to happen to Tesla? So today I'm going to show you how to profit from Tesla and some interesting trades that you might be able to do to really maximize your return on Tesla. I do have also some really unique trades that with a really high upside and a very low downside. So stick around for that. And if you like my content, if you want me to make more content like this, make sure you smash that like button, comment below if you have any questions, subscribe if you want me to make more content. And without further ado, okay, so Tesla stock. And by the way, I'm going to be using OptionStrat to show you what these trades look like. But the first way I would trade Tesla is to, instead of buying shares right now because they're so expensive, and who knows, right? Kathy Wood has predicted it'll go up to multiples from what it is today. Some people think it's going to hit $4,000 or $5,000. Some people think there could be an imminent crash down to $700, $800. Who knows, right? But instead of buying outright shares right now, because Tesla is so expensive, trading at a P ratio of 362, what I would do if I am wanting to get more exposure into Tesla is I would simply sell puts. Okay, so if you don't know what selling puts is, it just basically means that you are putting yourself in a position where you would have to buy the stock at a certain price, but you would get paid a premium, and therefore you would not only get a discount if the stock goes down, you would also get paid. You would also collect a premium that you would get for selling the contract. Okay, so taking a look right now, let's say I was to sell a put, and keep in mind that you do need quite a bit of collateral for this, or quite a bit of money to even execute this trade, because if you do get signed, that you would have to go ahead and buy these shares. Okay, so now again, I'm going to stick around because I am going to show you a trade that you can do if you have a small portfolio and if you don't have that much money to trade on. So if I were to sell a put right now, and let's say I'm more than happy to buy the stock at, if it goes down below $1,000. So right now I can open up this contract where I would be obligated to buy 100 shares of Tesla at $9.90, but I'll get paid $3,000 to open up that trade. Now, if it goes down to $9.90, I would have to go ahead and buy 100 shares of Tesla, which would be about $95,000. So that is quite a bit of money. But if you take a look at the premium, that is really, really great premiums, right? We get paid $3,000 for opening up this contract. And so long as Tesla continues to go up, or if it doesn't go down below $1,000, you will get paid $3,000 in just a couple of weeks. Okay, so that's the power of put options with Tesla. Now you're probably wondering, if you don't have $100,000 to shell out on Tesla, well, what can I do to trade Tesla? Well, good question. So if, let's say you don't want to just collect premium because you don't have $100,000 to trade on Tesla, what I would do is I would simply open up a put credit spread. So how a put credit spread works is you would simply buy a put, okay, and usually you would go sort of deep in the money, so underneath the share price, which will allow the stock to go down and you still profit. If it goes up, you would still profit as well. So I would actually open up, the further down you go, the more likely you would actually you would keep your premium. So let's say I sell a put at 185. Okay, sorry, buy a put. whatever put you buy, you would sell one strike higher above that. Okay, so I would sell the 1,090 put. Okay, so now what this says is if Tesla goes down by 2.5%, I still make $213, right? Now, the moment the stock goes down below 2.69%, then I would lose $287. So I'm basically betting that the stock of Tesla would not go down by more than 2.5%. If it does not go down by more than 2.5%, then I make a profit and everyone's happy. Okay, so that is the more conservative way to trade. Keep in mind that you do need to put up collateral for your put credit spread, and you do collect your premium up front, so you get paid $213 for opening up this trade. Okay, so that's the second way to do it. Now let me show you a more interesting way to trade Tesla. Okay, so let's say I kind of have a feeling that Tesla is not really gonna go up by too much and go down by too much. I think it's going to trade relatively sideways. And, your first thought might be, well, Daniel, you're kind of crazy, right? In the last, month, it's been up 9.5%. But if you take a look at the 5-day chart, it's only been up about 1%. Okay, so if you do this trade, you definitely want to do short-term contracts, so meaning that you don't want to set the expiration too far out, because then it will set you up for a lot more possibilities, right? But let's say you're willing to take small bets of 1 week out expiration dates. Let me show you how interesting this gets. Okay, so what you can do is you can go ahead and sell a call. Okay, you can sell a call at a strike price below. Okay, and then you would buy a call above it and below it, and now you would change your custom ratio so that you would sell 2 contracts instead of 1. Okay, so take a look at this, right? Okay, your max profit now becomes $490, and you're only risking $10 to make this trade. Now, granted, the stock would have to move really just a little bit, but if it does move just a little bit, then you would be up a lot of money, right? You would be up $490 on a max loss of $10. And that is really interesting because think about it. If you risk $50, you could be up $5,000 if the stock doesn't move that much, right? And that's definitely a possibility considering that this option is only a week out. And keep in mind, you can also close out options earlier, right? So let me show you another trade that's a little more interesting. And also keep in mind, you can do this exact same trade with different strike prices. So let's say I sell my call at a strike price above the current share price. I buy one above and buy one below. And I go ahead and change my custom ratio to selling 2 calls. Okay, so now the stock has more room for the upside, slightly more room, and then it has a little less room for the downside. Okay, so that is called a butterfly spread. Let me show you a more even spread where there's more possibility of profit, and it is the iron condor. So I'm going to start out by selling a put credit spread. Okay, I'm going to open up a put credit spread, which is simply just buying a put and selling a put above the strike price. Okay, like I said, this was discussed earlier in the video. If the stock goes down by 0.9%, I still make a profit. But if it goes down more than that, then I start to lose money. But I'm actually going to cap my upside now and do it on the call side of things. So I'm going to buy a call, okay, at the same strike, it has to be, the same movement above the current price. So I sold this 2 and 3, so I'm going to go up 2 and 3. Oops, sorry, I did it the other way around. My apologies. So I'm going to buy the call. I'm going to sell the call, 1 strike underneath that. So now take a look at this. Your max profit is $463, and your max loss is only $37. And this gives you a lot more room because Tesla can go down by 1%, and it can go up by about 1% as well before you start to lose your money. Okay, and the only loss, the max loss on this trade is only $37. Whereas if it does trade sideways, then you really make a lot of money. Okay, again, if you guys like this content, if you want me to make some more, make sure you like and subscribe. I did promise you that I was going to do this on OptionStrat, so let me just show you what that looks like real quick. So take a look at Tesla. Okay, and then we're going to build our Condor. Okay. All right, so that's what it looks like. Okay, so Tesla will have to trade in between 1,058 to 1,174, and that's how you would really maximize your profit. It also shows you different expiration dates. You can change up your put and call options. So this is extremely helpful because you can really adjust this a little bit and kind of play around with how your trade will look like. I really recommend our Candor, or sorry, I really recommend OptionStrat because you can test out different strategies. You can also test out the butterfly strategy, show you what that looks like. Right, so if you think Tesla is going to trade wildly, it's going to go up or down by a certain percent, then you can trade the butterfly spread. And there's just a lot of different strategies you can do with Tesla. And so make sure you check out OptionStrat.com. Until next time, guys, I'll see you then.